Hello, welcome to McBox Capital channel. My name is Michael Chu. This is the US stock market recap video for the week ending February 27, 2026. We have here Nasdaq weekly chart here. We're seeing that the market actually tried to bounce back to the red line, which is the 10-week moving average, but then it closed pretty weak on the week at the bottom of the range. We're still above last week's low, so technically the market is still okay, but being rejected at the red line is not a good thing. We're seeing more sell-off in chip stocks this week as well, so we'll take a look at that later. So for the week, it's down 0.9%. So here on the daily chart, you can see it tried to bounce back. It got rejected near the red line there, and then it came down really hard on Thursday, and Friday we also closed a little bit weak. So again, not looking very good right now. We are still kind of have this downtrend line forming. At least we came back to the red line, once this week. So it broke the low the 10-day moving average. But again, we're living under it again once again. So not a good thing. Volume also came up as well. So during the week, we see that the market was able to bounce back even with the new Trump tariff that was mentioned earlier in the week. But by Thursday, Nvidia news came out and a lot of, like I said, chip stocks tumble, and then we have more distribution days. By the end of the week, we have 9 distribution days on Nasdaq and 7 on S&P. So that is very high. Um, at the end of the week, we do have very equal number of accumulation and distribution, like 344 versus 354 stocks. Just slightly more distribution than accumulation. Same thing with the industry groups. We're seeing little bit of progress in some of the sectors here. Technology surprisingly positive by the end of the week. Retail just barely. Industrial and commercial is up a little bit as well. Health up as well, and obviously energy and commodities are also doing somewhat better. And financial was probably the biggest sector that was hit hard on Friday, with news related to private credit risks. Looking at S&P 500 on the weekly chart here, been trading very tight around the red line here. For the week, it's down 0.4%. It's just slightly below the red line, not by much. But again, you can see the last 2 weeks range is very tight. So from that perspective, is not looking too bad. But again, we are still under a very choppy environment, and you can see the fluctuations just constantly from week to week, and it just yeah, not an easy environment to trade. We need to kind of come to close to the 7,000 mark and break out to a new high to see a significant like resistance level being broken here. So we're just waiting for that, and on the down channel line, again, we are in the middle right now, close to the where the red line is. So again, it's just very choppy back and forth action. Here's QQEW, the equal weight. It has bounced a little bit. It looks slightly better. On the weekly chart, you can see actually more positive. So we're seeing, some tech stocks actually bouncing back. And then on the RSP, we also see that it also closed at the top range. So that's good. Both equal weight are actually bouncing back. This one is actually near closing high here. So that is very good. Here's Dow Jones. This one also has been pulling back on the weekly chart here. You can see we also closed slightly below the red line here. In the past, we have bounced back right away. So we would like to see that here, again. Let's see how it comes in, what happens in the coming week. On the daily chart, it's just sitting right near the red line, which is the 50-day moving average. We did make a newer low on Friday, but we did close off that. So we'll see. We have this trend line forming at the top as well. It's not very steep, but still we want to see if it can bounce back from this red line here. Here's Russell. Russell was able to hold on to above the red line here, bouncing off just slightly for the week. But again, we've been surprisingly, Russell had been more trading tighter than before, which may be a good thing because despite being down pretty hard on Friday as well. So it was down 1.6% on Friday. with the financials, a lot of the financials getting hit hard. Here's a pendant formation happening right now. So if we break out either on the upper channel line, on the lower channel line, it could determine the direction of where it's heading. Something to be mindful of. Right now, we are below the short-term moving average, like around the middle point of this pendant formation. So once again, we found support. The last few times we come down to the bottom channel line of this pendant, and we want to see if we can actually, again, continue to bounce back and hopefully eventually break out from the above channel line. Here's the Innovator IB50 ETF. As you can see here, we've been kind of talking about this, how it has been very resilient the last few weeks. In fact, it is up the fourth week in a row. So for those who subscribe to IBD, you will be able to see the 50 stocks and see what's on the list. This is definitely outperforming a lot of all the major index. And right now, it just broke out from this nice cup with handle. Well, this handle is very deep in terms of the handle, but it looks good in general, right? Like, cause especially consider how the choppy the market is recently. The fact that this is able to break out from this nice pattern is really something to consider. Look at this cup here, and then we have this handle, and then we've been bouncing. Look at that trend line there, very steep as well. Here's the 10-day trend line right now. Again, we found support here on Thursday. Thursday was a pretty bad day for most index, and yet this was able to close at the top of the range. And Friday it followed through and make a new closing recent high. We're very close to breaking out from the traditional previous high here, 41.36. So watch for that as well. So yeah, if you do have IBD, you can look at that list. A lot of the names on that list will be on my list as well. Not all of them, because I do have my own fundamental strict rule that I follow. So, but that will be showcased in the next video that talks about the growth stocks list that I follow. Looking at the 10-year Treasury yield, we see that on Friday it actually dropped below 4% to 3.96%. And on Friday, the producer price index rose 0.5% in January, with core PPI up 0.8%, both above yields for 0.3%. And the core also hit 3.6%, a 10-year high, a 10-month high, sorry, 10-month high right here. You can see on this chart right here. And so yeah, the PPI is actually harder than expected. This is the UP US dollar index here, looking very tight, trading very tight recently. It is still on the downtrend line right here, as you see from the red line, but it has definitely strengthened from the lows here and was able to find support as it moved to higher lows here, and also a little bit of a higher highs. So it's potential it can get stronger. This US oil fund, it definitely has gotten stronger Thursday and Friday on potential news about US will perhaps perform military action to Iran, and they did as of Saturday. Very early morning, they have along with Israel have outperformed some military actions against Iran. So this will be very interesting to see what will happen next, and how oil price will react. But certainly from chart perspective, it has definitely shown a lot of strength recently, trading very tight action, and here finding support here on Thursday morning, Thursday as well. As we mentioned last week as well, the XLE continued to show a lot of support as this continued to rally as well. Very sharp momentum here. Next we go to gold. Gold also is able to bounce back this week, making a closing high, a new recent closing high on Friday. So some gold stocks are recovering. Silver also bouncing back pretty strong as well. We did have a very volatile day on Thursday, but again, it was able to close at the top here. Copper is also following the same similar pattern. It's bouncing to new recent high here. Here's Bitcoin. Bitcoin really didn't try to bounce, but here on got rejected, and right now it's gone lower, and you can see this sharp down decline line on the upper channel. This is looking more and more like an L-shaped pattern, which is a very bearish pattern. Going to next week, we have the latest job report due on Friday, the ATP private job report on Wednesday, jobless claim on Thursday, and also the Fed's beige book on Wednesday. We have earnings from Broadcom, Costco, Kroger, and CrowdStrike. Taking a quick look here at the accumulation, the advanced decline daily line for NYSE at the bottom here. It's been nicely on an uptrend. You can see it make a new high on Thursday. Despite it was a down day for S&P. So, this is definitely showing a lot more breadth than before. So this is looking good, right? Again, the weighted index also showed that earlier as we look at RSP. And looking at Nasdaq here, we also have on Thursday and Wednesday here actually making a new high as well, new recent high compared to the index here. So that also showing breadth. So surprisingly, both Nasdaq and S&P are now showing more breadth than and also doing well compared to the weighted index. So now we'll start looking at the mega caps. This is SMH symbol 1X semiconductor ETF here. We did have a pretty bad close here for the week at the bottom of the range, and volume is a lot higher as well, and mainly due to Nvidia earnings coming out, and so this is technically not a good sign. But if we can bounce back this coming week, that'll be welcome. So right now we are sitting slightly below the pink line, which is the 21-day. We did reverse off the lows, not by much, but but nonetheless here you can see we had this huge gap down, from Friday here, and was able to close. And then on Thursday as well, right? We have really bad day here. So we have two bad days right now. So on the daily chart, we did come out here on Wednesday, but Thursday we pull back hard, Friday we pull back again. So that two negative days really put this semiconductor group in a very bad shape. So we'll see what happens next, whether we'll continue to come down to the red line or whether we're gonna bounce here. That'll be very important. So Nvidia earnings came out on Wednesday, and look at the earnings. It's still remarkable, growing at a very fast pace here in the next 4 quarters. Sales are again looking very strong. However, the stock did not follow through. We closed at the bottom of the range for the week. This is very disappointing. Here's the daily chart on Wednesday. It actually came out just a little bit. So let me take out my markups for a second here. It came out, and I tried getting in as well, a smaller position, to see if this will work, and obviously it fell on Thursday after the earnings. And then Friday it actually followed through on that sell-off again. So that is not good. It was down 4% as again. So now we're back to this black line. We got tested here, and then we bounced all the way here, and now we came back so fast. That is not a good thing. Whenever you have moving up slowly and coming down fast, that's usually not a trend you want to follow on the upside, because it's clearly showing there's way more selling happening. And we see that clearly here from the volume perspective as well. So it's going to take some time to recover, I think. So we have Taiwan Semiconductor here, like doing really well, the beginning of the week, but making new highs here. But it also followed the other semiconductors and coming down on Thursday and Friday. On Friday, it did bounce back to close near the top of the range, so now it's still above the 10-day again. This could be, potential bounce here. We'll see. But this stock has probably, shown a lot of strength lately, with bounces that are very strong. So we'll see what happens next. Here's AMD, also got rejected this week from the bounce here near the 10-day and 21-day. And then now we're trading Again, very close to the bottom of the range. And here's the black line 200-day that we have to watch as well. Here's Broadcom AVGO. This one also got rejected here near the red line this week. We are, still in a downtrend. We are now back to the black line 200-day, and so far it's been able to hold, but not able to bounce off it yet. So, but obviously, given the negative days on Thursday and Friday for chips, it makes sense that it hasn't bounced yet. But again, we want to see that bounce. So let's see if it can happen. Moving to the software group here, IGV ETF here, we able to, we hit a new low, but we're able to recover all of it actually, and close positive 1% for the week. So that is actually impressive, given how the indexes aren't doing as good, and then semiconductor also we just saw not doing as well, but yet software was able to bounce this week. So maybe there's a sign that and volume was the highest for that week too. You can see this balloon bubble here indicating largest volume here. Uh, so we could have a potential short-term bounce here because of potential capitulation of selling here, and it did try to recover Thursday, but it got knocked back down on Friday due to the weak market. But look at where it closed. It closed, at the top of the range. So yeah, this is a very good chart to follow at this moment. Also, the pink line, we still have that resistance, the 21-day. So that is still another level to get through. But I think if it gets through both of them, 10-day and 21-day decisively, we could have a very nice bounce, as the red line is still coming down and test that. So it's potential it could go all the way there if we can come back above the 21-day. Looking at Microsoft, very similar pattern. It tries to bounce back above the 10-day, but again got rejected there. On Friday, it didn't close well. It closed near the bottom of the range, 40%, 41%, and so we'll have to see. The volume was also a lot higher as well. Google trading very tight, surprisingly, and didn't make new lows. Looks really good. It's at still below the 10-day, and here's the 50-day here. But yeah, Friday it actually was positive, so that is actually a good thing. Meta also below the short-term moving average, very near the 10-day. So also didn't close at the bottom of the range, so that's another good sign as well. Amazon, very similar chart pattern. All of them are near the 10-day. This one also didn't close at the bottom. This one actually closed at the top of the range on Friday. On Friday, Apple actually took a beating here on really high volume, came back down to the red line. So before that, it was actually mostly above the short-term moving average, but Friday it really got knocked down hard here. So not a good close. Tesla is still below this trend line here on the downtrend. Again, got rejected at the short-term moving average, and now again we're trading near the lows here, close to 400 level, and the black line is coming up to it. So we'll see how it reacts around that line. So on Friday, there were news that Netflix no longer will try to acquire Warner Brothers here, as Paramount Skydance have a higher offer. However, both of those stocks actually jump. So look at Netflix here. It has bounced 3 days in a row, and even before Friday's news, I think. So that is a good sign. And volume is super high on this bounce here, clearing the red line here. So maybe this correction is over, and it doesn't mean it won't digest the gains here, but maybe this is could be the bottom here. We'll see. It has corrected a lot. Right now, even with this bounce, it's still down 28% from the top here. So something to watch for. Obviously, right now it's really extended from the short-term moving average here. But yeah, as times proves, if we can trade tightly and found support near the 10-day, that would be good. Thank you all for watching this video. My next video will be more focused on the growth stocks list that I trade and follow. So please stay tuned for that. Thank you. Here's Palantir. I did miss talking about this. It I mean, it's still under the 21-day line, so we'll still have to wait for that, but it is looking a lot better. We're seeing a tightness at the bottom here, but again, we still haven't made higher highs, right? So, so crossing this 21-day and closing decisively above it, will give it a shot at maybe bouncing back towards the 50-day and 200-day here. So we'll have to watch for that.